One problem that's been expressed to us over the years is that the broker is always very keen to maintain client retention, and probably if there's a point of weakness for them, it's that point from where the client is introduced to the lender. Now that can be a one-off transaction, or it can morph into something more substantial for the client's requirements over a yearly period or the period of that relationship. And what the white labelling does, by having their own branded applications, branded letters of offer, and those elements there, it provides the broker with a lot more gravitas and a lot more substance, and elevates their status, if you like, to go back to the client. And that's been a really big issue that they've raised with us over recent times. Secondly, aside from the client-broker relationship, there's also another sub-level, which is the broker-broker relationship. You've got individuals out there who are one-man shows, if you like, who focus their business in a small range, and then you've got what I would call super brokers, who act as the broker's broker. So a deal will be referred from one to another, or even possibly two, before it gets to the end chain. Now, these super brokers are the guys that we find generate the most amount of business for us, and are the probably highest performing brokers out there in the marketplace. And by having this product for them, what it does do, it stops that multi-application, multi-privacy form, multi-letter of offer issue, which can often confuse the client. It cuts that out of the equation completely and provides that continuity for them to present a product to the marketplace that has some substance. If you're going to go to the effort to deliver a white label product, it's very important to have a product that is going to be completely acceptable and be the best in market for that particular style of product, and that's what this one is. At the end of the day, lending is not a complex exercise. It gets down to maths at the end of the day. I mean, rate and pricing will always drive the success of a product. There will of course be some instances where a security is specialised, or there may be a level of anxiety with a particular transaction where price is not going to be key, but in the main, pricing and the suitability of a product is going to be the major driver. Not really. At the end of the day, mortgages are mortgages, and they all come from the same gene pool. When you're comparing a first mortgage product, such as a home loan, to a first mortgage short-term product, they are the same. The documentation is ostensibly the same, and the processes are the same. So there's no fundamental difference there. Probably as far as a lot of short-term funding, a lot of that is based around second mortgage and caveat-based funding, and that's where there is a marginal difference. It is a cousin of the first mortgage, but it is a relationship nonetheless. And brokers do have an opportunity to either engage in understanding a little bit more about that process, and it is a little bit different. It is not complex, but it is different, or they can choose to rely on us for the full back-end support, and we can do the majority of the work. In essence, it's up to them to sort of make a decision as to what level of investment they want to apply to this particular market, and how much they want to get involved, and the level of autonomy they want to explore as far as those transactions are concerned.